Marcus, welcome to the podcast. Marcus Sturdivant is a financial professional passionate about empowering individuals and families through financial literacy. With a focus on personalized guidance and goal driven strategies, he helps clients navigate life's key milestones, from buying a home and funding education to planning for retirement. Marcus believes true financial success stems from confidence, clarity, and trust. Beyond his work, he's a devoted husband to Brittany and a father of four. First and foremost, how did you get started in the financial world?
Perfect. Yeah. So first and foremost, I guess I got started in the financial world just by being in the 80s economics type world. Actually, first started learning about finances, financial literacy back in high school. I got a job. I realized
Nice.
I needed just to earn some more money. Went to college. I always liked business and business courses. I worked at
Hmm.
a small business for a while, for a long time. Over a decade, I learned a lot about the small business and the way that works. I went back to school a little bit while, got some more degrees, and then I got into the actual like finance world of uh, investing. Obviously, you already invested inside like 401ks, but right around the first Trump presidency, I took up a liking for it, and then I got my
Mm,
series as my license and all those things a few years ago.
interesting. Here's the thing, like, my background's in science. I'm curious, what did you study in college? Did you study finance, like economics?
Yeah, so in college, I always liked business. So I had an undergrad in
Nice.
business administration and law, and then my post grad, I got an MBA. But I will tell you this, that the series certifications that I had to study for, like the FARA test and those type of things, like having an MBA or having a business degree, like it maybe gives you a little bit of an advantage, but it doesn't give you much of an advantage because that's just like different jargon, different technology.
Yeah, why I was saying, like, I was in the science realm, and finance always seemed like a world apart. Fancy terms, it all seemed complicated. And then I spent a lot of time, learning about it, and it's unfortunate because how can you be successful in the business world, even as an entrepreneur, when you don't understand the structures of finance, of foresight, of intelligent planning? And unfortunately, many people get caught into it. And also, like, when you wake up, it's almost like I wish I knew earlier, because this is all about pivoting early. So I guess jumping right into this, someone's just graduating college. What's the first piece of advice you'd give to them to even just adjust to the mindset of creating a healthy financial future for themselves?
It's a good question. So the first thing I would do is tell them, or if they're already starting a job, if they have a career, whatever they're doing, the big long and short of finances and having more at the end is that you have to save more than you spend, right? So you have to realize that you have to get in the habits of just start saving,
Mm,
figure out some type of savings, look at your plan, think further out because you're eventually going to be at this retirement age. I know it seems so far out now, and don't be intimidated by the terms that you're going to run across. Okay. Because you're going to run across some terms that might seem complicated when you just jump into the finance, the jargon of it, but it's all pretty basic, simple economics when you look down to it. Like I said, you just spend less than you make. And at the end of the day, you will be out ahead. Now, if you want to get into, deeper type of investment type of advice, so I'm going to pick up a book and start reading, just something simple, just so you understand maybe assets and liabilities
mm.
and what you want to gain or what you want to have. And that'll be a good place to start.
Yeah, I feel like it's just the fancy terms are just for finance people to make it sound like what they do is complicated. So here's the thing: we're jumping right into AI because it almost seems like it's secondary, but it's not. It's heavily related to where this industry is heading. And I'm sure when you first started, the financial world was fundamentally different than it is today. We're entering a world where the focus of finding stability and success around physical labor is slightly diminishing. And people who are pivoting towards crucial assets are going to have a really successful future, perhaps generational wealth. And you're also seeing a shift of even certain assets shifting from one to another. And I kind of want to jump into the financial market really quickly, talk about crypto, because you're seeing a switch. People who are dealing with even just really fundamental assets like gold that have been around forever, you are seeing, and it sounds like it's a weird time to have this discussion because gold just hit an all-time high and it's been uptrending and it's going to continue uptrending. But where I'm going with this is that, you have assets with a market cap that is that is 1/10 of gold, but it's going to be the future. And I want you to talk about Bitcoin. I want you to talk about other cryptos and how much of a portfolio would you recommend we allocate? And would that be a good place to start?
Okay, so as far as crypto goes, when it comes to crypto, I usually am only referring to Bitcoin because there's so many different types of crypto and coins out there. Like it's once again, we're trying to talk about just getting started when investing, right? So you want to pick something and you want to start with something. Bitcoin is like a large cap stock investment. Like as far as the crypto goes, it's one of the more well known uh, tokens. The government's investing inside crypto, inside of Bitcoin. So it's just
Yeah,
governments across the world, like sovereign nations, are increasing their Bitcoin
that's it.
assets.
That's it right there. And by the way, just to point out, the amount that gold corrected in the past week from its all-time high to where it is now has the amount that has left that asset is greater than the entire crypto market cap. I'm not just talking Bitcoin. I'm talking Bitcoin, Ethereum, Solana, just everything combined. That's just to put in perspective how small this asset is relative to even stocks like Nvidia. Um, and it's a high risk volatile asset. And you're right to say Bitcoin's a good place to start because Bitcoin is really where you should stop and end if you're not studying the market. And risky, right? I imagine you wouldn't recommend we go all in on crypto. So like how would you, and even just taking a step back here, forgetting about crypto for just a moment, like broadly speaking, how much of your portfolio would you recommend you allocate to various assets?
Got you. So yeah, that depends on what stage of life you're in, right? As far as
Mm.
what you need to be invested in. One thing to think about right now with this crypto is that, and just investing in general, you think about meme stocks and those type of moves, you have a different type of investor now. So there's a great wealth transfer going on from like an older generation down to a younger generation. Inside that same wealth transfer, you have a transfer of men passing away and passing their money over to their wives who are getting these assets. You have a different generation with children who are now like who are staying in their houses longer, just more attached financially to their parents longer. And then you have crypto coming in. So it's a different type of investor, whereas older investors might have saw gold, younger investors now see Bitcoin as the same type of
Yeah.
investment. So like you said, gold's been around for thousands and thousands, I guess depending on how long you think the world's been here, millions of years. Gold's been an asset. But people look at crypto as digital gold. Crypto's not quite digital gold. Crypto has its own, Bitcoin especially has its own movement. Sometimes it's risk on asset, sometimes it's a risk off asset. But
Yeah.
as a store of value, that's where people are seeking it. And the current environment is bringing more utility to it as sovereign nations, as I mentioned, add crypto to their Bitcoin, to their reserves. Obviously, we have an administration where I think they have like billions and billions of dollars in crypto and Bitcoin as well.
Yeah. Yeah. It's mainly from seized assets, but uh, they're not actually buying crypto yet. Hopefully one day they will. But let's talk about traditional stuff for a second. So the American dollar, right? It's seeing a unique shift today, and you're starting out. You got a few bucks in your bank account. Instead of keeping it in your checking or in your savings, you move it to your long-term savings, and you're getting, accruing interest of between 3 and 5%. So to me, that's the kind of 101 advice I used to get starting out. Oh, put it in a high yield savings account. You'll get
Mm.
5% earnings. And I'm doing the math today. I'm like, I'm not even beating inflation. Like I'm barely beating inflation. Like this doesn't make any sense anymore. And plus the currency is being devalued. Ultimately, it's going to have to be devalued to an insane extent because that is really the only way they're going to be able to manage the current debt crisis. So, I mean, crypto seems volatile, but it seems like it's the only asset that you really, even gold, there's more of it. We're finding more of it, and it's compared to something like Bitcoin that's not going to depreciate over time. Like I would love to find other, places to kind of poke around and look into, but would you agree with me that, the US dollar might not be the best place right now to put all your money in, and you might want to be getting more diverse in how you make investments?
Yeah, so the dollar, one of the things that people have noticed with dollar definitely has been on a steep decline this last few years. We're looking for a stable dollar, right? So the level is important, but the stability of the dollar is even more important because, yeah, eventually we'll go from a dollar I don't know if that's happening next year, next 5 years, next 10
Mm,
years. But while this dollar is lower, you can invest in that's why you see like international stocks tend to do better because that dollar is lower. You can buy more money with
mm,
international stock. That's why money tends to go abroad. As far as you were speaking about the deficit, they're looking to lower the interest rates. They're not saying that's particularly for the deficit, but those type of things are just reducing the short-term amount rates that they have to pay on the deficit in the short term. So yeah, you definitely want to diversify, especially someone like our age, having a percentage of crypto or some type of alternative. I won't even say crypto, just alternatives. Whereas before you traditionally had 60-40, now people are having 50-30-20, 60-20-20s. It just depends on where you're at and your risk tolerance. If you have
yeah,
time in the market. You're not jumping in and out of these trades, even with Bitcoin or a stock. If you're staying in there long enough, you'll see the returns.
yeah. Someone even listening to this conversation is like, this all sounds way too technical, right? Where would you give them advice to start?
All right. So to start, let's say you have a workplace plan. All right. If you have a workplace plan, you don't understand anything inside the workplace plan, set it up, contribute to it as much as you can. If you can't figure out a number, at least contribute to the match that you're getting back from your company. Like that's going to be the number one place that you can get a return inside your 401k. Besides the actual investments, you're getting the free money as a return from your company. If you do want to look at something like crypto or Bitcoin, if you don't understand it and you want to see how it works, I would suggest buying a small amount, maybe the amount that you would spend on a nice dinner for two, or maybe the amount that you would spend, depending on your social economic class, what your amount of income and cash flow, and maybe the amount you would spend to go to a nice sporting event, right? Buy
Yeah,
some, see how it works, start small. Because as we saw
yeah,
with crypto and Bitcoin and stock market, these things go up and they come down. We just saw the pullback with Bitcoin from its all-time highs, but it'll go up again. There'll be opportunities for it, and it could
yeah,
come down even further. These are good times right now. I know they seem turbulent. I know they seem bad, but for people who are long-term invested, these are the opportunities you want to look at. So if you don't
for
understand, you want
sure.
to buy it. You can buy your Bitcoin or your stocks or your 401ks, invest in now and just keep investing continually, and then you're getting the dollar cost average, and where it's just going to average out over time.
Yeah. So, Marcus, before we get back to crypto, I want to talk about the 401k for a second.
Mhm.
So, someone doesn't understand why a 401k is important, right? Why, first of all, what's the benefit of putting money in my 401k and rather than just keeping it into an account and pulling it out when I'm older? So, I want to start there with just the whole idea of like tax benefits and like why even pivoting now is so important. Because why do I care how much money I have when I'm retired? What is it, 64.5? I don't know how old you have to be to pull
65,
out from your
somewhere around there.
retirement.
You get your Medicare, get
Yeah,
your yeah, so
yeah,
and that's another thing of like, younger investors, they can't it's hard to see that far out, so you can't think that far out, but a couple things, so say you're a higher earner or any earner, if you contribute to your 401k pre-tax, that reduces your taxable income at the end of the year. You also have the option to contribute to your 401k with the Roth portion now. I think that's an option for people where you can add up Roth inside of some plans, so that's after-tax money, and when you retire that money is that money. That's one of my clients like to
right,
say, that's real money. Like that's your money. But with the pre-tax, you get the pre-tax benefit of at the end of the year when you do your taxes, it's a tax deduction, tax break.
yeah,
And then you also have the investments that grow tax deferred. You will pay your taxes on one day. And one of the biggest things is a match. You get the match from your company. That's essentially free money. If they're giving you 3% to match your 3% or 5% to match your 5%. Otherwise, you could be in an IRA and get the same benefit,
yeah,
except for the match.
yeah, and just to clarify for those listening, when you put money in your 401k, it's money that you haven't paid taxes on. So either that money would be considered income, and you'd be paying and I'm not an accountant, so speak to your accountant, but that money that you have $1,000 that you're going to put in your 401k, that's money that the IRS never charged you tax on. That's money that goes into your 401k, and you pull it out when you retire. And that money also, when you keep it in an investment, it gets compounded over time. So what seems like a really small amount, 3-4% a year, from when you're 25 or you're 20 to when you're 65, turns out to be a whole lot of money. So planning early and putting a little bit early on is super, super important. And by the way, you could pull that money out later. You'd be charged taxes on it. There would be some penalty, but think of it also as like things can go sour in life, and you can have real financial hardships, and sometimes people do need to pull out that money early, and there is an option where you can do that. Obviously, you'd have to pay taxes on it, and you'd have to pay the penalty, but there's also benefits. I know, like, with certain retirement funds, you could take out X amount of dollars for your first home, right? Correct me if I'm wrong there, Marcus. You can take around $10,000 if you're purchasing a house.
for a down
That's
payment.
and that's for down payment, and you won't be paying taxes on that. So even understanding the lingo and the language, and just even doing some Google searches and watching some YouTube videos can really give you just a perspective. And that's what's important. It's not knowing exactly where to put your money at this point in time. It's about even understanding the language, the vernacular, and how to think like someone who's always pivoting. Because you're going to realize early on, yeah, you're going to do a lot of grunt work and you're focused on making money, but you have a second job. And that job is building wealth and learning how to take your money and intelligently manage it so that it can actually grow and work for you.
Right. Michael, I
So,
just want to,
mm,
can I just clarify one thing? I'm sorry. I didn't mean to jump in.
yeah, yeah,
You
mm,
will
of
eventually
course.
pay those taxes on that 401k money if it's in the pre-tax. So you'll pay it when you retire. That's what happens to a lot of people. They'll, if they retire, they accumulate all this money. You get to 63, you've never paid taxes on it. You say, I need $100,000 for this first year. Uncle Sam says, okay, pay me my 35%. And he's just as happy that you're retired as you are. So
So
eventually you pay,
thanks for
let's
correcting me. I'm gonna remove that from the podcast because if I'm wrong, I definitely want to put that
no, you're
advice in there.
good.
But
That's a,
just so I
like,
understand correctly, when you're 65,
mhm.
sorry, I apologize. I don't mean to talk over you. There might be a slight lag. When you're 65 and you pull the money out of your 401k, you are charged taxes.
Yeah. So if it's in a
Uh,
pre-tax so you can set the 401k up, yeah, and you have it in a pre-tax part, but you can have it in a Roth. So if you have it in the Roth account, that's already paid taxes. But the Roth account won't give you the tax break that the
hmm,
tax deduction break that the pre-tax money will give you. But whatever is in your Roth, so you put $1,000 in your Roth, that $1,000 in your Roth goes to $10,000. When you go to take that money out, it's $10,000. You put $1,000 in pre-tax, it grows to $15,000 in the same amount of time that $10,000 does. But you go to take out the money on, you have to pay some taxes on it then.
uh,
So it's tax deferred, not
so you
tax
pay
free.
taxes later on, but the thing is
You're paying
that
taxes.
taxable amount got compounded over time, and that
Right.
actually works to your benefit.
Right. Hence why some
Interesting.
people actually do Roth conversions at younger ages. When people talk about Roth conversions, some people never do Roth conversions, they just pay taxes at the end, but you could do a Roth conversion younger if you think you're going to be earning money later in life. Some people's goals are to have like all their money in Roth by the time they retire. And those are the people, like you hear the people online, like, I'm retiring tax free. Their stuff's been in Roth. Like they've got everything
Mm,
converted to a Roth. They're over the age of 59 and a half. They don't have to pay that 10% penalty and they can take that money out. You can withdraw money
yeah,
from your 401k for the home, like you're saying, though, for like down payments. You have hardships and life events that you can't take money out from. But Uncle Sam's
interesting.
always going to get taxes. HSAs, you can pay those without tax if you use it for.
Personal finances in the age of AI. So, how is AI changing how people manage money, and how is AI changing the landscape of financial investments?
Man, AI is just like the rest of the world. People should get on board with AI, figure out where it's taking us. I mean, AI is going to keep running whether you're on board with the trend or not. It's helping. It can help people, just like you said, figuring out some of the terms, figuring out where to begin, figuring out just general things. Never take one person's solely advice. Like they can sit here listening to myself, listen to you on this podcast, but I would suggest someone else go listen to someone else, listen to something different, get all the perspective that you can and gain in there. Because AI, while it's good for the speed that it accumulates information, AI can give you some really bad information. It has hallucinations and it just might send you out some bad stuff. Have you ever Googled yourself like with AI and saw some of the stuff it comes back with and you're just like, well, that's not true. And like, oh, I apologize. Me and Copilot have been having that conversation.
Mm.
Maybe I
So,
should.
I imagine that the human financial advisor is still absolutely important.
Yeah, the human financial advisor is important because we bring a sense of actual connection. Sometimes people just want to listen. People just want to be heard. And I know that AI is getting to that point where people are using it for like therapists, where they're speaking to the AI as well and getting answers back. But AI is not sentient yet, right? So we still got a little bit of time with that. And then just some of the connections with some of the generation who doesn't use AI. There's still a lot of people who won't use AI, who won't use computers, who don't pay for things online. Like There's still
Mm.
these people.
It's a good place to start. It's a good place to get some of the fundamentals, some of that, that vernacular, that language of just understanding. So when you do speak to a professional like yourself or a financial advisor and whatnot, you're at least coming with good questions and you're making better use of their time.
Exactly. It's all about the questions, Mike. It's all about the question.
Yeah. So let me ask you this. There's always like these viral trends of what's considered a good investment, and you watch these YouTube videos, and people are telling you to put all your money in meme coins and these coins that have no value, and it's this constant fight between viral trends and intelligent, sustainable investments. So first and foremost, why do people fall for the trendy financial advice?
Have you ever seen the old shirt or saying where it says like the person who speaks the loudest in my family wins the conversation? It's kind of that thing. Like
Yeah.
sometimes people just have like they have this shinier looking thing and and it looks fancy. Like I don't know if you've seen in the news, Kyle Busch is suing an IUL company for like $8 million, saying he was frauded for that. Like so, it's just
Hmm.
there's a lot of stuff out there, a lot of information out there. Be careful what you're looking at. Um, but don't be afraid of it. That's the problem. See, people fear what they don't understand. And like you were saying with the vernacular or the particular jargon, the lexicon that we're using inside the finance, people just get lost in it. That's why, like I said, one of my main things is Main Street meets Wall Street. I speak simply so I can break it down simply to folks as well.
Yeah. So if someone comes to you with a financial advice or, a recommendation of what you might want to consider investing on, like what advice would you give to someone as like key markers to kind of filter out, at least initially, what might be a good idea, what might be a bad idea, what's worth looking into, and what seems like too good to be true or likely just a risky investment?
Well, if it seems too good to be true, it probably is too good to be true. But if we're just sitting back and talking about a particular investment, like if 90-year-old person comes to me and wants to buy Bitcoin, I'm going to ask them why. They tell leaving this Bitcoin to their grandchild, because I mean, there were times when age doesn't necessarily make it a part of your risk tolerance. People always assume that because you're older, your risk tolerance is going down. But depending on what you're using those investments for, like if you're leaving them for someone else's inheritance, you might want part of that portfolio to be more aggressive, right? You might want to have more aggression. So just figure out why you want to invest in something. Don't invest in something just because everyone else is talking about it, because it's the hot topic. Just step back, take a second, sleep on it, sleep a couple of days on it, call someone else and talk about it,
That's
right?
actually great advice. That's actually great advice to sleep on something. You should make a rule that from the time that you heard about the investment and the time you make the investment, you should give yourself a week or some time frame because there's real terms out there, FOMO, fear of missing out,
Hmm.
right? Where it's like you jump onto something, but you realize that it goes up and down all the time. And a lot of times when your friend is telling you about an investment or a stock, it's often too late. You're chasing the market. And you're really just serving as exit liquidity for smart buyers. I mean, when your mom tells you to buy Bitcoin, that's a real serious concern. That means that you're dealing with a bubble and that the market is just oversold and it's going to correct, right? So overbought. But and then with like gold, where you see photos of people lying in the streets to buy gold, like that is a horrible idea. When retail is buying an asset, that's when all the smart people who have pivoted early, who have studied the market, have already taken their position. And you're coming at the very top and you never want to be there. So the secret here is you don't jump on something because someone tells you about it. Do your homework, monitor the process, maybe put $1 in the stock and just see how it goes for 2, 3 weeks. Get a feel of how these things work. And then you can start inching your way to becoming more of a professional and just making smart decisions. Would you agree with something like that? And would you add anything to that?
Right. Yeah. Yeah. No, that's actually some solid advice. And you mentioned FOMO. The opposite of that, well, not even the opposite of FOMO is let me remember the acronym. F around and found out, right? Like that one too, because
Yeah,
that could be the opposite side of that FOMO. You jump in there and you find out that like this is a real
right.
investment, this is a real thing. Like, oh my God, I just lost that money. Like, don't.
Yeah. And it's
There's
hard. It's harder than money.
Yeah,
Um,
if everyone's talking about it, it may be too late. Don't try to buy the highs. Don't try to buy the lows. It's hard to time the market. Very
yeah, and
hard to
it's a
time the
secret to
market.
know that most people lose money in the market. I think 90% of people lose money in the market. And you have to understand, who's that 10%? These are people who are extremely well educated. They've been doing this for years. They've got institutional money. They've got financial advisors behind them. This is who you are competing with. So just keep that in mind when you make these investments, that you really want to be patient. And if you were to know nothing about the stock market and you were to do the exact opposite of your emotion, whenever you feel euphoric, whenever your friend tells you something's pumping, it's doing great, you do the exact opposite to say, oh my God, it's going to keep going up. No, you sell. And when everyone is saying, this is horrible, this is crazy, it's a bloodbath, everyone's selling, Bitcoin is crashing, it's going to zero, it's going to zero, that's when you scoop up.
You're a
And that's
contrarian,
what smart
Michael.
people do.
You're
Sorry?
contrarian. Contrarian
I
investor.
don't even
That's
think
what it's
that's
called. A
contrary.
contrarian. That's what it's
The
called.
contrarian trader. Right,
Yeah,
right,
yeah.
right. The contrarian trader who
Contrarians.
does the exact opposite. Well, it's common sense, because if the masses lose money, then you do the exact opposite of the masses. And our biggest flaw is emotional impulse when we're dealing with the market, and when you're invested more than you can afford to lose, it becomes very, very emotional. So yeah, I genuinely recommend even dabbling with the market. This stuff takes time, like years,
Yeah.
2 years, 3 years. You gain that finesse, that intuition, to start making really intelligent trades, and you want to be as cautious as possible in the beginning. Marcus, moving to real estate, like, do you have any recommendations there? Is that something you focus on?
Um, Not particularly. I like real estate in the environment that we have. Like if as far as like it's been really depressed here lately, but as far as like the home buying environment, I really like that. I think it's going to turn in the I want to say the end of 2025. We're nearly at the end of 2025, but going into 2026. This seems to be an environment where the direction of interest rates are going down. That will help with the home buyers. What
Mm,
we'll have to see what the tariff offset cost is with the input prices as far as that goes for home buyers, but the interest rate should be coming down to where buyers are looking. The supply seems to be a problem, and people have been reluctant to buy. So hopefully, people will start buying homes again because that's a real big part of the economy. Not only do people buy their homes and then they have to go to Lowe's or Home Depot and buy stuff to furnish their homes, they start doing all this stuff. It's a big economic cycle buying a home.
mm.
So
Right,
hopefully, we
right.
see better home results in 2026. It's been like the dollar, man. It's been down.
Yeah, where are you located, by the way?
Right outside Charlotte, North Carolina.
Oh, okay. Very
Yeah, yeah.
nice.
So an interesting
So
home buying market.
yeah. So I just, someone just graduates college and they're starting their professional career, and they're thinking about creating a good financial future for themselves, and particularly financial freedom. Would you give them any piece of advice you'd give them to help achieve and get themselves on the right path for financial freedom?
The fire investor or just the general person who's trying to uh, eliminate debt. If you're just out of college, like student loans are probably going to be one of your biggest debts. Hopefully, you
Mm,
figure out a way to go through college without too much debt. There seems to be a push for people to go to trade schools or traditional colleges and reduce your debt before you come out of college. But you don't want to keep taking on debt. That first credit card they send you, you can cut that up. They'll send you another one. Maybe start with a secure credit card so you can't go over your limit. Like you can just put as much money as you have on there, but you're also building your credit at the same time. If you have a job, set up your 401k, start investing in that. If you don't understand, at least invest it to a match. You could put it in a target date fund. I'm not really a fan of those, but if you don't understand, at least you're investing and getting that thing starting to grow. And then you want to have some cash invested in something high yield, not just in the money market or in like 0.25. You want to put that as like a high yield savings account. And then just like people tell you, and then just save more than you spend. If you can
right.
always save more than you spend, you'll be fine eventually.
Yeah, and I like to look at it as, like, if you're trying to build a really good future, you got to look at everything as opportunity cost.
Hmm.
When you want to get a really nice apartment for rent, or you want to buy yourself a super fancy car, you need to realize that that is money that you could have invested and done, maybe doubled it, tripled it, quadrupled it. So the way I see it is, when you're out of college, you're not supposed to, it's not your time to bathe in your wealth, to live a luxurious life. It's your time to think like a poor person, where you're saving money, you're calculated, you're strategic, you're learning how to do as much as you can with as little as possible. And you're saving. Like you're saving like it's your last dollar. And if it means getting a slightly less beautiful apartment so you can have more money, that's how people create really beautiful futures because that allows them to get to that beautiful future as quickly as possible. The guy who blows his full paycheck every month, partying, going to fancy restaurants, buying fancy cars, looks cool right now, but he ain't getting too far because he's not able to build anything. So, and that's a mindset. It's not about like knowing the best stock. It's not about, putting it in the right, investment fund or this and that. It's about adjusting your mindset to think like someone who's going to make a ton of money, to think like a rich person. Because what you want is to know, how do rich people think? And that is a very specific way. Everything is opportunity cost, right? If you can get from A to B with $5, but you've spent $50, that is just inefficient. And if you are living in a place where rent is 10 times higher and there's no need for you to live there, that is loss of a lot of opportunity.
Right. The wealthy don't spend their own money. If you haven't like ever noticed that, they'll have assets that they pledge, stocks or things of that sort. Think about, um, go back to the AI for a second. You hear a lot in AI right now with circular investments and the type of investments inside these companies, NVIDIA getting money back from it. But then Oracle came out and said they're going to finance some of their debt. And people are upset at Oracle.
Yeah.
Like, why are you financing your debt? Well, of course, Oracle will finance their debt if they're going to pay 5 or 6% on this loan versus pledging some of their stock, which might go up 25, 30%. That's the
Right.
opportunity cost you're talking about, right? Where you give this stock away and you're going to miss that percentage on the upside. I like to think about it like this as far as like personal, tying it back to the personal finance where you're saying, if you can live different for 5 or 10 years now, you can live different for the rest of your life. And by live different, I mean like living like you're saying, like where you're just not getting that extra stuff. That stuff is cumulative. Eventually it adds up. Like those dollars you aren't spending, they will add up and snowball into something larger into like later in the life.
Yeah. Yeah. It's so important you learn how to do as much as you can with as little as possible. And
Hmm.
I guess that segues into my next question. Any piece of advice you would give to someone who wants to develop good habits for long-term stability?
Okay. So yeah, if you want to develop good habits for long-term stability, automate your saving. Right? Get that stuff just coming out your account so you don't even have to worry about going to do
Mm,
it. Automate your bill payment. Automate as much as you can with your finances so that stuff's coming out and you're not even have to look at it. Right? You're accumulating, you're saving. Get in the habit of saving. Right? Invest in something. Invest in your 401k, invest in some real estate. Invest in yourself is the biggest thing. Right?
yes.
Because if you're not
Yes.
investing in yourself in whatever type of way it may be, whatever you're doing, uh, your wealth won't grow anyway, or you'll get your wealth and
Yeah.
you'll just lose it.
Yeah. Like if you think you're busy now, you're only going to be more busy in the future. You're just out of
Mhm.
college, right? You have the world at your fingertips. And here's a piece of advice here. We all want success. It's almost an irrelevant question to ask someone, do you want to be successful? The answer is obviously yes. The real question is, what are you willing to give up to get it? Are you willing to give up partying on the weekends? Are you willing to give up your fancy car? Are you willing to, you know, give up your nights and hone in on a new set of skills and master a new craft? That's the real question. And if you tell yourself, "Oh, I'm going to learn it in the future," that's the exact opposite mindset you want. You want to say, "Now I have all the time in the world." Imagine when I'm married, I have kids, I have other responsibilities. Life only gets more difficult. It doesn't get easier. So I like to think of it like every second that I'm not becoming smarter and carving out my skills, my competitor's getting one step ahead of me because someone out there is doing that.
Mhm. You got that right. There's always someone up a
Yeah.
little bit earlier, someone else putting in a little bit of work. But as long as you know you're doing the best that you can do and like pushing yourself to your limit. And then that's another thing. People don't realize that you don't understand everything. Don't be afraid to seek out experts for what you don't understand. Right. Like
Yeah.
I have a understanding of finances, but like if I need to build a deck, which I actually used to do, but I couldn't build like I used to be a helper, but I couldn't go out and cut all the woods and build my own deck. That thing would be crooked, right? I would pay someone to do that. You know what I mean? Like know what you're
Right.
good at, know what you know, and
It's
know what you don't know.
That's how the economy runs. That's why we don't have to raise a cow to make a hamburger, right? It's
Right.
and that also ties really well into the conversation of like AI and ChatGPT, right? We're entering a world where we really need to double down on our uniqueness factor. Anything that can be patternized and delegated, anything that is a B plus skill, an A minus skill, that is something that is at greatest threat with GPT. You want to look at yourself every morning in the mirror and ask yourself, what is truly unique about me and what is noise? What could I patternize and delegate? And what is really hard to replace? You want to quadruple down on the thing that's really hard to replace. And you want to delegate everything else because that's how you're going to survive in this really quickly changing landscape.
Right. You have to make AI your tool. You have to figure out. I'm a big block scheduler dude, so like I do things in blocks inside the blocks inside the block, but it's very efficient. Like figure out whatever it is your way that you're going to use your time. Time is so people. It's a debate, right? It's a debate. What's more important, time or money? You can't get either one back. Can you?
Right.
Can you truly get money back if you lose that dollar? You might get another dollar back, but you won't get that same dollar back. So time versus
Yeah.
money, what's more important? You just got to figure out. And for different people at different stages of your life, like you said, when you're younger, you have more time than you have money. So you should be working on earning money. And then as you get older, you have more money, you have time, and people start worried about, say, they realize like, whoa, I've spent all this time earning money. What am I going to do with my time now?
Right. Right. So, Marcus, you're full of wisdom. You've been doing this for years. I have a question for you. Who is your mentor? Who do you look up to? Who has carved your mind that you recommend other people follow?
Oh man, that's a really good question. There's not like anyone you're going to find on social media that's going to help you. That has particularly helped me. It's like I said, I grew up in small business world. I worked with some people. I had some really good just owners of people who own their restaurants. I work for the Johnson family. They're really good with me. I learned a lot over it. The first financial plan firm I was with over at Tri-State Financial Advisors, those guys are great. They did a really good job of just pouring in and filling me up as far as it goes. As far as like mentors in life, I've had some really good coaches who just helped me out in life for
Any
sure.
books that you read that you were like,
Dude,
man, this really is a
I
good way
read
to think?
I read all kind of books. I love books. I love reading.
Fill me in. Give me the secret books.
Okay, yeah, yeah. So if you're young, people always ask me about books and where to start out with. So I'll usually say, you can start with, and it's going to sound cliche, but it works. Start with The Prince by Machiavelli and The Art of War. Why do I say The Prince and The Art of War? Because The Art of War shows you how to tactically approach different things, right? And then the prince tells you like how to manage these things once you've gotten them in different ways that you attain them. So there's the prince who
Mm,
attains it by uh power, a prince who attains it by like someone who just implied power, like they didn't really have the power, but someone gave them that thing. So like if you take about power by paying mercenaries, that's a different type of power. That's a different type of thing. So it's just like those two books, sit back with your mindset. I love those. As far as I love Stocks for the Long Run. That's a good book for if you want
mm.
to learn about investing. That's a really good book, actually, if you want to learn about investing. Dr. Jeremy Siegel wrote that, and it really goes back through the history and just talks about stocks and bonds. Uh, so yeah.
Great. And Marcus, where do you see the finance industry, particularly investment stocks, crypto, in the next 5 to 10 years? And where do you see yourself in the industry?
Mm. 5 to 10 years. I see the market's higher in 5 to 10 years. Not crazy
Good.
higher like it's been. Yeah, not
That's
like it's
that's good to know. You're
but
bullish.
we
Okay.
may have had a bubble by then. I will say that we may have had like it may have gone down and come back up in the next 5 to 10 years.
No,
But I think the market's higher than where it is right now. Just like look back at the
yeah.
history of the stock market. Look at where it was 10 years ago, 20 years ago, 30 years ago. The market goes up. Sometimes you have 10-year periods where the market goes down, but in general, the market goes up.
Mm,
So I think the market's going up. I think Bitcoin will be a much larger part of the economy than it is right now. But one of the
yeah.
things that people have noticed with Bitcoin is like as crypto and Bitcoin has come down, it's been as the stable coin and stable dollar coin has increased.
That
Right.
is the narrative this bull run. It's all stable coins. I agree.
Right. So as that, but there's only so much money that can go in there. Right. There's only so much
Right.
money in the economy, whereas which would be an entirely different problem if we just start printing more money.
But it's
Uh,
really a tiny percent. What's in the whole crypto market cap is such a tiny percent. I mentioned this earlier. The amount that gold lost in the past 2 weeks, so I think it was around $4 trillion, is a greater market cap than the entire crypto industry. So it's going to play a huge role.
Right.
And everyone, you always think you're too late. Oh, I wish I invested in Bitcoin 2 years ago. I wish I invested in Bitcoin 5 years ago.
Mm-hmm.
You will always make that argument.
There'll be
Or
an opportunity.
what if it goes down? It's always might go down. That's why if it only went up, there would be no reason not to buy it.
Trees don't grow to the sky. Trees don't grow to the
Yeah.
right.
Yeah.
And then I don't know
Marcus,
personally,
yeah.
5, 10 years, I guess I'll see myself just firm full of clients, helping people, maybe doing a lot more of these podcasts, sitting down talking. I love to spread the message, man. Just financial literacy. Don't be intimidated by money, folks. But respect money. Don't be intimidated by respect and learn about it.
And be educated and take smart risks.
Right.
That's how you make money in life. You take, I mean, not financial advice, but you take smart risks. You're not going to casino. You're going to study the fundamentals of what you're putting your money in. You're going to gain conviction towards those fundamentals, because in order to make money, you got to watch things go down. You can
Mm-hmm.
never time the bottom perfectly, and you can never know when to sell perfectly, right? Sometimes you're going to catch a bit of a falling knife, but if you have conviction of what you're putting money and you don't have emotional impulse towards it, that is the secret to becoming a successful trader. And so, Marcus, how could people get in touch with you?
Yeah, people can get in touch with me. They can reach out to me I'm on LinkedIn, or they can check out I have a personal website, marcussturdivant.com. YouTube, I'm on YouTube. You can go to my business website, theabcsquared.com.
Wonderful. Marcus, thank you for your time and wisdom. It's been an honest pleasure.
Yeah, man, it's great sitting down talking with you, Mike.